Good afternoon, everybody.
Hi, everyone. Welcome to Wealth Building Wednesday with Jana and Naz. We're here to answer your questions regarding anything to do with home buying and real estate and investing portfolio. So we actually got a great question that came forward during our week that we had available. One of the questions that we got was regarding home buying process, because a lot of people are not sure where do they start and how the process goes and what's required and stuff like that. Mm-hmm. So here we have Jana, who's going to answer your questions regarding the pre-approval process and what's required in the first few steps. Generally, the first step, I believe, it is understanding what's required in the sense of like what the lender is looking for. So I'm going to have Jana answer those questions for you, the first steps.
Okay, thanks.
Yeah.
So the question that we received specifically on, my set of knowledge is, what's the difference between a pre-qualification and a pre-approval? So if things wonderfully fell in order of the alphabet, it would make sense that the pre-approval comes first, and then the most thorough is the pre-qualification. But it's actually the opposite. Pre-qualification is a quick conversation that I have with the borrower that just kind of covers length of time employed, what do they think their credit score is, what's their income, what's their savings, what's their monthly bills. It's nothing vetted or thoroughly reviewed, and it won't set you up for your strongest offer. With inventory being low, we're still seeing lots of competition on homes. I caught a post today from another friend of ours that just had 25 offers on one of her listings. So it is a little bit competitive, and it's always best to take the extra time to do that full pre-approval and get it done right. So then when Naz is presenting your offer, she can assure the seller that all the questions have been answered. We won't have any in-process delays. You're really sure-footed with what you're going to be paying monthly, and you can just, close on the home and live there and love it. So what does it take to get a pre-approval? First, you can simply apply online. Otherwise, I'd love to just chat with you briefly and take the application from you, because sometimes there's questions that come up regarding your type of employment, if you're self-employed or you are a W-2 employee, how long you've worked, did you just move to the area, did you move from out of the country. All of these things being my specialty, I can hash out really quickly and make sure we have all the documentation or know what documentation you need to grab to secure your pre-approval in a watertight letter that'll stand firmly for you. So in general, we look at a 2-year history. So we look at a 2-year credit history, although we'll be managing a FICO that carries on longer than that, the Fair Isaac credit scoring system that mortgage uses. So credit we could really do a whole other call about. But if you're thinking about buying within the next year or two, asking for your free credit report or calling me and making an application and let's start working on your credit or seeing the areas that you need to improve is a fantastic first step. If you're buying within the next couple months, we'll have a tighter time. Yeah. 6 months is really, if we can have 6 months to optimize your FICO score, that's best. So don't feel like you have to wait until your lease is up if you're a first-time home buyer to bother me. People sometimes say, I don't want to bother you. And Naz and I are here as a resource to help you. Exactly. It's never a bother. Yeah. If you buy a home in 10 years, and it takes us 10 years to get your savings, your finances, meaning your FICO score in order, your employment in order, let's do it. Yeah. We're here for the long haul to help you build your wealth and stabilize your life. Yeah. And homeownership is such a stabilizing factor in your budget monthly. If you can set what your home expense is, not for next year, not for 3 years, but for 30 years, it's amazing little piece of magical security and an ability to take something that you don't know what your landlord's going to do next year. They're going to raise it 10%, 30%.
Or they're going to sell your home.
Oh yeah, or guess what?
Yeah.
Do you need to move? That
I've had a lot of
happens.
calls this year where the
Yeah.
landlords are selling because they know there's shortage of inventory and they can get top dollars for their home regardless of the condition of the home. So I've noticed that happening, and a lot of people are like, oh my God, my landlord's selling a home, we have to find another rental home.
Yes.
But the conversation goes back to, why are you looking for another rental home to always be unsure where your living situation is going to be?
Yeah.
So when you're renting, the number one thing happens where people are like, oh my God, the interest rate is 7% or 8%. And I'm like, okay, but you're paying 100% of someone else's mortgage. So please explain that to me. So if Jana is able to get you pre-approved, if Jana is able to get all the ducks in the rows for you and get you the budget that you require to purchase your home, does not have to be your dream home. This is your first stepping stone.
Yes.
So that's the most important thing. People don't understand. They're like, oh no, I want to buy my dream home. No one in this day or age or anyone I've ever met has ever bought their first home to be their dream home. It's always going to be that home that you will find defects. You will, like, even if you find your dream home, it's still not going to be perfect, because when you move in, there's going to be a lot of imperfections that you see. So this is the opportunity for you to understand that it's better to be a homeowner than a renter. And this is where the pre-approval comes in place. And a lot of people are like, oh, just get us a pre-qualification. That's not good enough. Pre-qualification is not. Coming from the seller agent aspect of things, because I do assist with sell and buy. And if I see a pre-approval, that's golden to me, because I know the lender has done a lot of details to your tax records and so on and so forth. So I can take that offer, showing it to my seller and being like, look, this has been pre-approved, so this buyer's serious buyer. Versus getting a pre-qualification, honestly, if I get that, I will present the offer, but I know at the end of the day, the seller will pick the buyer with the pre-approval over the pre-qualification.
Yeah.
So it's best to go through the process.
Absolutely.
Do you agree?
Yeah. And so in general, there's different types of income, self-employment, W-2, but 90% of the borrowers that we work with, or buyers that we work with, are W-2 employees. And so in that case, it's super simple what we need. We need a photo ID that's valid to make sure that we know who you are.
Correct.
And, just make sure that it's not going to expire during the process time. During COVID, and sometimes here in Nevada still, where we're located, it takes a minute to get a new driver's license or to get an appointment with a DMV. So it's just one thing that we do to make sure you're good. You can always use your passport. So photo ID that shows you legally who you are. Your W-2s for the last 2 years. So we're in 2023, so we're looking now at 2022 and 2021. Your most recent month of pay stubs and your savings that you have. And we'll need a full 60 days of that savings account to review for any large deposits, because we are part of a reporting system and for the government to make sure that large deposits are explained, so they're verified sources.
Yes.
So really items.
That's very important, because another thing is, like, a lot of my buyers are like, oh, we're going to get a gift from our parents, or we're going to get a gift from so and so forth. And I cannot clarify with you guys enough that how important it is that any form of money that's coming into your account needs to be like details as to which account did it leave from, which account it's entering. If it's a gift, there has to be a gift letter that has been written and signed. It has to be wet signed by the gift giver. And basically there is a certain amount that you can gift without getting taxed if it's a family member. So
I believe it's $17,500 per individual this year, but I might be off on that. I am not a tax advisor. I am a home loan specialist, right? A mortgage loan originator. So spending that time up front is so incredible. And I have a quick story on that I could share. Okay. One time I encountered another realtor friend of mine encountered a buyer that came to them from an online lender. And he said, hey, talk to Jana and just have her look at your pre-approval before we go out home shopping. I just want to make sure it's done right. I said, hey guys, great. I'm happy to help you. I need 4 items. I need your driver's license, etc., etc. The wife in that scenario said, "Why do you need our driver's license?" And I said, "Well, I don't need it today if Bruce is the person who's met you in person, but down the line we're going to need it for the underwriter."
Mm-hmm.
They said, "We don't want to give you all that. You don't need our driver's license." So they got under contract on a home here in the Nevada area. Day 2, their lender said, "I'm sorry, you don't qualify," and quit returning their phone calls, emails, and texts.
Why?
So, well, because they were moving in from another area and they had variable income, which is another whole scenario that we don't need to get knee deep in today. But these questions are a reason I love to hop on a call with someone, because I ask the questions that the underwriter is going to want answers to from the very get. So if we need to wait a little bit and change jobs, do we need to make shifts in employment to make sure that the underwriter is going to really be happy with the income picture, then great. But we were able to get that together, and the seller was able to successfully close on time when they wanted to, and we made it work. But it takes a little footwork sometimes. So having an open conversation with a lender that you know and trust is priceless.
Yep.
And don't be intimidated to talk to them. Don't feel like you're bugging them with your questions. Every lender I know wants to help you, wants to put you in the best case scenario for when you purchase a home, whether it's to live in or as an investment. It's a smooth sail for you.
Yeah. Also, another thing, even if you switch jobs, make sure the line of job that you're doing is similar to the ones that you left. So then it doesn't show a hiccup, or it doesn't show like, I guess it's like a lateral move versus like a completely new, like let's say if you, if you worked as...
I have an example.
Okay, yeah, go for it. I'm not trying to think of an example.
Let's say you worked as a teacher.
Yes, there we go.
Yeah. Let's say you worked as a teacher and you left teaching to be an independent contractor, doing anything else in the world.
Yeah.
We're going to have a little wait time before we can approve you, and it can be up to 2 years. So we want to make sure that if you're purchasing a home, that we've got steady income with no gaps, and if it's self-employed income, we've got that 2-year history for you.
Correct.
And businesses start every day, and some don't make it. So I see the reasoning behind wanting 2 years income for self-employment, because you want to show that it's stable and steady. The last thing we want to do is put somebody into a mortgage, and then their business is struggling in those first few years, and then their home life is struggling because they're troubled making that mortgage, and then their credit might have troubles. So we want to make sure you're steady and stable and happy in your new home. That's our ultimate goal.
Correct. Now the next question we also got is, what's the value of owning a home versus renting a home? And honestly, I cannot tell you how important it is. As the homeowner myself, and you as well, and owning our rental properties as well, it is so important at the end of the day to not only just own your home, but also building on the equity. Because a lot of people can use their home and remove a line of equity down the road for any reason. Like, let's say if you purchase your home in 2018, and right now we're in 2023, so that's 5 years. In 5 years, your home has appreciated on average in Vegas anywhere from 12 to 22%, give or take. Now, if you've done any improvements, definitely it would have gone slightly higher on appreciation value of your property. And so let's say if you want to get, like, God forbid, okay, something happens, an emergency in your family, someone gets sick, and you need to pay now medical bills. A lot of my clients are like, oh my God, we have to sell our house because we have to pay medical bills. Actually, you do not. And I talk people out of selling their homes for this particular reason, because your home ends up becoming like your bank. You can remove a line of equity, set it aside, and you can use those funds. Yes, the interest rate is high, but it's better than being homeless, or it's better than basically selling your home and going into a rental property. You are still getting your payment, you still have your job. So you still have that money coming in where you can still continue your livelihood, but the line of credit is such a cushion to have. And it's removing the equity from your home.
Yep.
So you can explain a bit more on that aspect of things too.
Yeah, I think my favorite use of home equity is further real estate investing.
Yes, yeah. There's that option too. But I'm just saying
But those emergency situations for sure, or educational purposes.
Yeah.
If somebody if they're a teacher and they want to further their career, and maybe they have their master's, they want to do their PhD and move on to the college level and teach as a professor, etc.
Yeah.
You can use it to advance your life. It's basically easily, in the scheme of things, accessible money to access because it's assets based.
Exactly.
It's based on the equity you have on your home. So for those who are in the industry of lending money, it's sure for them because you are giving the asset as your promise to pay back, right? So just today, this morning, Naz and I were chit-chatting about a home that we saw here in the Las Vegas area that we're not sure if another investor had started the home, but the carpet was removed. There was some blinds missing, some cabinet doors missing. Damage is done.
Yes.
It might have been demo, and then, who
They've
knows
given up.
if the investor has run out of funds, etc. But one great tool that we have, and I do all the time, is home equity line of credit to grab that quick investment that you just saw today.
Yeah.
We have a solution in-house, that we partner with, I shouldn't say in-house, forgive me, that allows us to fund in 5 to 7 days. So you can pull a HELOC out. That's an approvable source for a down payment on an investment or a primary home if you aren't making the move, and use that to help you with the funds you already have saved to purchase the home and to make renovations as needed. So instead of just like, oh, I saw that house, it's a great location.
I wish
think
I had
that would
the
make
money.
a great, I wish I had the money.
Yeah.
You can nab it and then do the renovations and turn around and sell the home if you like to do that, or hold on to it and rent it out and build your portfolio that way. So.
And people don't understand that because whenever I sit down with people, their first question is like, how do I get started? How do I get started? I'm like, this is how you get started.
Yeah.
You first save up enough to have a down payment and talk to Jana in the process, a lender, and then understand how you can get your credit score better or so on and so forth, like basically the groundwork done. And then once we get your pre-approval, the agent itself, that's when we will be like, okay, this is what the area you're looking for, these are the homes that are listing. And then we go out and look at those homes. Once you fall in love with the house, we put an offer in and then we get you into the house. During that process, there will be a lot of interaction between you and Jana, where Jana will be asking for documentations because that's what the underwriter needs and wants in order to approve your loan. Then a third-party appraiser comes in that has nothing to do with Jana or me, and they will be actually assessing the value of your home. If you are working with a good realtor, they actually will tell you what the comps are within the neighborhood. That does not depend on the seller. The seller could list his home for $800,000, but the true market value is at $600,000. So that's where your agent steps up and says, "Oh, no, the comps are showing this much. This is what we're going to offer," and present your offer to the seller's agent. The seller's agent is trust me, very aware of the unrealistic price point. They will present the offer over to the seller and go from there. Now, if there's a cash bidder or a cash buyer that outbids you, that's a different story. But at that aspect of points, once you are under contract with your home, that you are your starting point, that's where Jana and I come and we communicate with each other to make sure the deal is closed.
Yep.
Years go by, like even 5 years go by, that's when you're building equity. And that's your point to take the next step into your investment portfolio. So it's the best thing to do is owning a home. The appreciation value, the equity that gets built.
Yeah.
The pride of home ownership.
For sure.
Yeah.
100%.
Yeah.
Some people talk about the equity portion and they'll say, oh, the average is only 4%. But if the average home value is over $400,000 and you're earning 4% on over $400,000, that's something I'd like to partake in, right? Instead of a CD at my bank or something. You always have varied investments, but I don't think you can really take away the value of investing in tangible real estate. It's my favorite. Of course, I have myself spread out in different streams too, but it's my favorite, and it's something that I can physically see and touch, and I know it's there, and it just gives me a different level of comfort.
Correct.
As I get older too, knowing that investment isn't just going to demolish itself.
Correct.
And if it does, it's insured.
Yes.
Right? So
Yeah.
it's just,
And that's why we have homeowner insurance.
yeah, that's why we have homeowners
Yeah.
insurance.
And
which
that's
is also
required.
affected by FICO,
Yes.
by the way.
Yes.
So it's a really good thing
Yeah.
to start with that FICO score once again.
And then I also had another client who actually sold one of their property because they bought a brand new home build and they loved the home and everything that was in the house they loved. The only thing they didn't like was the backyard because
Yeah.
you have 1 year to make improvements to the backyard. So they're like, we need this money because we need to sell this house and we need to make this backyard into our dream backyard because the house was a dream home.
Yeah.
We
I know
looked
what
into
this is.
we looked into a lot of things, and then the best conclusion was to sell the home.
Yeah.
And so we did we did get the home sold. He took that money, and now he's working on his backyard and making it his dream home, dream backyard, everything.
Yeah.
So even if you own a home, you could own like 3 or 4 homes. Let's say if you have 2 kids and they both need to go to college, guess what? The best gift you can give your kid once they graduate is a home, and tell
Yeah.
them you have a choice to rent out the rooms in the house, or you can rent out the whole home. You can stay with
Yeah.
us, or you can move into that house, rent out the rooms, and then use that fund for your college funds and stuff like that.
Yeah.
Or they can even have the choice of selling that home, using it to pay off their college tuitions, which we all know it's ridiculous.
And you can
Yeah.
help your child with housing that way too.
Exactly.
So if you have an investment home,
Yeah.
the way I have bought my own portfolio is by buying a home as a primary, which means you're going to live there.
Mm-hmm.
It allows you to put the least amount down in the beginning,
Yeah.
right?
Yeah.
So you can use a down payment assistance program. You can scrape together. You can have parents that gift you money towards a home purchase. I never had that.
Yeah.
But you
No,
can-
let me ask you one question.
Yeah.
Because a lot of my clients end up asking me, how much do I need? I think that's it. Yeah, how much do I need as a down payment? And it's honestly variable because is this an investment home? Is this going to be your
Yeah.
primary home? The more you put down, obviously you're not. If you put down 20%, it's no PMI.
Yeah.
If you just have 3.5, sorry, the light just went off.
Yeah, in the room we're in.
Yeah. Give me a second.
Okay.
Yeah.
Right.
But
Yeah, the
continue.
down payment
Oh, there we go.
percentage does matter according to who lives there.
Yeah.
And it's risk based is why. Because if you live in your home and let's say, you're 4 in a new business and things get a little wonky for a minute, the payment that you're always going to make is the home you live in because you need a place to live.
Correct.
If it's a vacation home and you go there, once a year, then maybe that kind of falls out of even your memory that month if you're stressed, right?
Mm-hmm.
So the lowest risk is always the home you live in as the borrower or buyer.
Yeah.
And so it has the least amount of risk to the investor or the mortgager on your home, right? So it is lowest investment that you have to make to step into the home.
Correct.
It can be as low as 3%. 5% is a conventional loan limit baseline, and you can go up to 20. We just had a client that put down 35% because he had an asset that came in from an inheritance, and he wanted to have his payment be really affordable monthly. So, you can put more than 20% down, but typically that's the most that people
Yeah. And then just to clarify, a lot of people get confused. They're like, oh, if I put down more, my interest rates will drop.
do. Yeah.
How would you word those?
I would say your interest rate wouldn't necessarily drop.
No, it doesn't.
But this could be a whole call too, or a whole
different conversation. But I just want to
pricing on interest
yes.
rates. In general, an interest rate is a choice,
Yeah.
and it comes along with a closing cost typically. And we just want to make sure that we're choosing the right rate for you to be comfortable with the payment, no matter what the interest rates do. Because people will make projections on interest rate, but we don't have a crystal ball. So, in general, people are like, oh, we'll just, you'll get this house, we'll refi you later. But I think what's really important is that you're going to be comfortable with this payment if rates adjust in a year, if they adjust in 3 months, 2 months, or 5 years.
Yeah.
Is this something that, as someone who has a monthly housing cost, is this comfortable for you? Meanwhile, while you're having a comfortable monthly housing cost, you're building that asset. You have a forced savings by making payments towards your principal or the base loan amount that you start out with. That's really important. when we had historically low rates, 40-year lows, in my lifetime, the lowest rates. At that point, we were really guiding clients to invest what they were comfortable in buying down to the lowest possible rate, because we knew that it was either an investment home or a home that they lived in, but if they moved out of, they were going to make it an investment home.
Yeah.
And that mortgage was going to be with them for life, for 30 years until they decide to move money and pay that mortgage off, or, if they use that home as a HELOC to buy another investment. But it was kind of the set it and forget it. Right now, we're just using discount points as for comfort. Hopeful that in the next, upcoming time frame, we'll have an adjustment downward, because rates do go up and then they go down. It's cyclical, and you can span it out over the last 60 years.
Yeah, but your down payment does not dictate the interest rate that you would be getting. So there is
loan to value.
Loan to value. Yeah. Just to clarify, do not ask me that question. No, I'm just kidding.
I know, but ask me, and I'll span it out, and we can run scenarios. If you put down 5%, this is what, let's say 8%.
Correct.
Looks like for you. If you put down 10% versus 20%.
Yeah.
And once we get that principal, that mortgage, that private mortgage insurance in or out of the equation, you can look at it two ways. People are like, oh, I don't want to have PMI. But sometimes you want the money to redo the kitchen of the home you're buying under market value, because you just found it and you're so excited, right? So that mortgage insurance is sometimes something that you might want to carry in the beginning, redo the kitchen, and then ask your loan servicer to look at the value of your home and
appraise
just
your home.
drop it.
Yeah.
So there's so many little intricacies to home loans that can be wonderful tools to get you to a place where you're just so immensely happy with your choices. And that's why I love my job so much.
Yeah, I don't, and I love mine too.
Yeah.
And that's why whenever people have these concerns or questions like, oh, I don't love my house because of this aspect of things, I'm like, well, okay, if you want to sell it that quickly, why? Like, let's look at the equity that you have in your home. Use that fund to make this into your dream home, or use the fund from the equity to purchase your next home, and then you can rent out this home. I'm that realtor that talks you out of selling for that reason, because people don't really see the value when they're in it, because they're just like, oh, I want to buy this home because now I can get it. But don't be in a rush to sell this, because then you can make this into your investment, and we can take that equity, purchase another home, and then let the renters pay your mortgage. So that's always my advice to people, and that's what we do with our property, and I'm sure you do with yours too. Do you guys have any questions or anything along those lines?